Greetings, Ted Hicks, Chief Investment Officer for Hicks Associates Wealth Management. Today is Friday, the 24th of February, 2023. It's early afternoon and the markets have been trading down all day today. And I just wanted to give a quick update. Last week, we talked about two main points in our video. We talked about the update that we had last week on inflation, and we talked about the 4,100 level on the S&P 500. Well, this morning we got another update on inflation. And again, unfortunately, the update was worse than expected. And so that the stock market didn't take that very well, and the market's been trading down all day. And the reality is that has just been par for the course for the last 2 or 3 weeks. I think this will be the third week in a row that we'll trade down for the week. So if we study market history, we tend to know that February can be a pretty tough month. The months of October, November, December, and then January tend to be pretty good months on average. And on average, February is a tough month. And that is certainly true this year. But that's also not that surprising when we had the January that we had. We had a very strong January. And so to get a little bit of a pullback in the month of February is not that surprising. I think this week, the overall S&P 500 will be down about 3.5%. And I think from the February 2nd high, I believe that will put us about 5 to 6% down. Well, a 5 to 6% pullback in the broad markets are not that surprising. They're not necessarily that fun. All of us would like the market to go up forever, and that's obviously not realistic. But the reality is a 5 to 6% pullback is not abnormal. It's actually very normal and tends to be pretty healthy. So last week, we also talked about the 4,100, the 4,100 level on the S&P 500. Unfortunately, that level did not hold, and the market has traded down through that level. And as today, the broad market is testing that 200-day moving average. So if the stock market stabilizes and can hold that 200-day moving average, that can be a pretty good sign, because it's like pruning your bushes. Pruning your bushes, it tends to be pretty healthy. It encourages growth. And that can very well be what we're experiencing right now. It's just a little bit of pruning in the overall broad markets. That said, as active portfolio managers, we do believe in trimming our losses. So if a position tends to move against us, we'll take that off the table, because we don't want to let that loss get out of hand. Because remember, we're also very cognizant of the fact that most of the pundits believe that we're going to see a recession this year. Now, we're a little skeptical in that regards, and we'll talk more about that maybe in the monthly market monologue. But the point is, if we do see a recession this year, that history then suggests that the stock market will indeed go lower, and perhaps as low as October's low or even lower. So we have two distinctly different possibilities for outcomes. And I know that's maybe silly to say that the stock market either goes up or goes down, but that's really where we're at. If the market holds that 200 level, it's a good sign that there is some support. We trimmed those hedges like we talked about, and the market then begins to rally. That could very well happen. It's also entirely possible that the market continues to head south, because there is indeed a recession coming. I don't know which is going to happen, but the point that we want to remind everybody on is that when we're managing money for our clients, there are no transaction costs when we execute a buy or we execute a sell. So when a stock market in a position is moving against us, if it's creating a loss, we would prefer to take a small loss to protect ourselves, to protect our clients, because it's not going to cost anything to put that trade right back on next week or next day or whatever. So those are the reminders that we wanted to share with everybody. But again, these pullbacks tend to be pretty common, and we'll see what transpires next. At the end of the month, I will do the monthly market monologue, where we'll go into a little bit more depth. Feel free to tune into that. And obviously, if you have any questions, feel free to reach out to me or your lead advisor, and happy to answer any questions you have. Hope that helps, and we'll talk to you soon.